We are live from Bloomberg's world headquarters in Midtown Manhattan and streaming on Twitter. I'm Matt Miller.
And I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, as regulators and lawmakers renew calls for a crackdown, we'll get the view from Davos with policy expert Kristin Smith of the Blockchain Association.
And from crypto to stocks to bonds, it's been a tough time across asset classes. We'll weigh the factors at play with Chiente Hsu, a former Wall Street banker who now heads up the fintech firm Alex.
Plus, doubling down, billionaires Cameron and Tyler Winklevoss have their fortunes riding on a comeback for crypto startups. Details on their next big bets.
All of that is ahead, but first let's get a snapshot of the market. The best way to see how the individual tokens are performing is CRYP Go on your Bloomberg terminal. But I wanted to highlight both some of the coins themselves and what we're seeing in crypto-tied stocks today, Matt, because there's a really interesting divergence. On the one hand, you have Bitcoin barely changed on the day, only down about 0.1%, trading around that $29,000 level. Ether down about 2 percentage points, but the declines are far, far worse for some of those equities tied to digital currencies. Coinbase down 8%, Riot Blockchain down 10%, and both of these stocks, Matt, are down more than 80% since their peaks in November. Bitcoin, on the other hand, only down about 55% since its November peak. So really interesting to see how we're seeing much more bleeding in some of those speculative areas of the equity market, crypto stocks included, than in the cryptocurrencies themselves.
It's fascinating to see which assets are losing value and also at what time certain assets are losing value. I have a chart that is, I really think, pretty mind-blowing. Absolutely fascinating stuff. What this shows you is throughout the day from midnight to 11:59, the trading of assets. In red here, you've got the S&P 500. This is the average over the last month. The market hour is obviously 9:30 to 4 o'clock. And then in white, you've got Bitcoin trading throughout the day, the average on the weekends. Notice that it rises on the weekends. The average on a weekday when the equity market is trading is down more than 1% a day over the last month. So I think absolutely fascinating. Regulators, C-suite members, investors are all calling right now for clearer regulation around digital assets after that stablecoin meltdown ramped up speculations. Listen to what they had to say.
Crypto is an area where I've been calling for us to take steps to regulate the market.
Understand everything from privacy, security, and when people have errors or deal with fraud, that they have some recourse.
It needs guardrails. It needs regulation.
Building confidence in this new infrastructure.
The Terra Luna, just catastrophe, should be a wake-up call to DC.
Right now, many people don't know where to turn.
That's just the beginning of the trouble for cryptocurrencies.
They have the potential to introduce meaningful risk to the real economy.
It's something that Congress has been looking at.
Many governments are still looking at this.
It's an urgent issue for Congress to address.
The latest draft of a bipartisan Senate crypto bill is that looking to protect investors in the next meltdown is the most important thing. Could be released as soon as this week. Ben Bain, Bloomberg finance regulation editor, has been following the developments for us. Ben, tell us first about the two senators that are at the heart of this regulation.
Yeah, so it's kind of an interesting story and something you don't really see oftentimes these days in Washington, where it just seems like things are at such a pitched level in terms of partisanship. You have Cynthia Lummis, who's a Republican, comes from a Wyoming rancher family, and you have Kirsten Gillibrand, New York Democrat, kind of on the moderate side and a securities lawyer by trade. So it's kind of an interesting pairing here between Lummis and Gillibrand, really trying to come together around crypto. And it's also kind of telling, if you will, that they've really picked up the pace and are really hopeful that their bill might have a chance, particularly after the recent meltdown of TerraCoin, which was just being discussed a few moments ago.
All right, Ben, well, let's talk about how large that chance actually is. What is the likelihood that this bill or any others regulating crypto are actually passed this year?
Yeah, I mean, I hate to be a downer here, but not a lot is likely to pass right now in Washington. We're heading into, really the midterms are just around the corner. People are already starting to think about campaigns. That said, this bill in particular has gotten a lot of attention. It does seem to have some traction. So even if it doesn't pass this year, there's a chance that it might even be broken apart and could be considered by different committees, or we might see it reemerge next year. It's notable it's a bipartisan bill, which means that even if Republicans do take back the House, or potentially, as some are saying, even win the Senate, there is still a possibility that this plan could go forward. So it does seem like we're likely to see something happen, but I wouldn't hold your breath for something over the next few months.
Maybe not this year. Ben, thanks so much. Ben Bain there out of Washington, D.C. for us. Joining us to talk further on this issue is Kristin Smith, Executive Director of the Blockchain Association. Kristin has worked closely with Senator Lummis and Gillibrand on this crypto bill. She's in Davos right now for the World Economic Forum. So, Kristin, what do you expect in terms of the kind of regulation U.S. consumers need to protect themselves from something like Luna, the crash in Terra Luna?
Yeah, well, certainly, Matt, it's important to remember that there is regulation in place for crypto today. However, given sort of the unique qualities of crypto networks and cryptocurrencies, there isn't quite the perfect regulatory framework that's in place today. So I think the work that Senators Lummis and Gillibrand are doing in order to bring additional regulation to the space are very much welcome and needed. I think there are two primary issues that get the most attention for regulators. The first is having a way to regulate the spot markets. Today, crypto exchanges in the U.S. have money transmitter licenses, which isn't exactly directly related to what they do most. Instead, I think what we need to see is a single uniform federal regulator. The other issue is stablecoin regulation. And there are many different types of stablecoins, and having disclosures around what are in those reserves, having audits of those, and making that information available to consumers would go a long way towards preventing something like the UST collapse that we saw a couple weeks ago.
Can I also just interject before we continue talking more about regulation? Just because you're from the Blockchain Association, are you concerned about Ether's move to proof of stake from proof of work? Because we have a mayor here in New York who's talking about putting things like birth certificates and property deeds on the blockchain. Obviously, there are many different kinds of blockchains, but I would feel safer with my property deed, my home ownership being documented on a proof of work blockchain rather than a proof of stake blockchain.
Yeah, well, listen, I think the market is ultimately going to decide that question, right? I mean, I think there are the proof of work blockchains are very strong. Proof of stake blockchains have a lot of desirable qualities as well. I don't think it's up to regulators to decide if one or another is more desirable. I think as we go forward,
I'm just worried about the safety, Kristin, because it concerns me that you could have some bad actors, very wealthy people, jumping in and taking control of a blockchain if it has all of our property deeds on it.
Well, I think that the Ethereum blockchain is decentralized enough that's not a real threat. There's enough activity happening on there. But yeah, certainly on a smaller blockchain, that's potentially a consideration. But no, there are advantages to both types of blockchains. And I think that it's going to be the market that susses that out as new assets are added to these blockchains.
Kristin, to what extent do you think that blockchain technology, cryptocurrencies at large, have a reputation problem on Capitol Hill? I'm just wondering how much is about perception versus real understanding of how these ecosystems work. What is your sense on how great the level of understanding really is among lawmakers?
We've made a tremendous amount of progress. If you compare where we were a year ago to where we are today, the overall basic level of education that policymakers have about this asset class has risen quite a bit. The challenge is that this is such a fast-moving industry that's constantly evolving and constantly changing that it takes a lot of work for these policymakers to keep up. But I think what policymakers on Capitol Hill realize is that they have constituents in their district that are investing in these assets, that are building on top of these blockchains, and they're very passionate when it comes to public policy in this space. And so I think we've caught as an industry and as an ecosystem, we've caught the attention of Congress. And with the exception of a few outliers, most of them are, if not already crypto champions, they are crypto curious and they want to learn about this. So I think it's incumbent upon us in the industry and in the crypto ecosystem to make sure that they continue to grow and learn and understand. And that's a lot of what we do here at the Blockchain Association.
Okay, so the attention has been caught by Congress. I'm wondering what kind of attention is being paid to crypto at Davos, at the World Economic Forum, where you are now. What kind of conversations are you having around this?
Yeah, well, listen, this is my first time at Davos, and I wasn't expecting much conversation on crypto at all, but I don't think I've met a single person that hasn't wanted to talk about it. If you walk down the promenade here in Davos, you have all of the storefronts that have been converted into houses by various crypto companies, as well as traditional tech companies. But you can't go 20 feet without seeing a crypto logo and bumping into someone working in the crypto space. It's definitely part of the conversation. And I think there's a real sense that this is going to be a part of our global economy going forward, an important part, and that people want to have discussions about how to get the public policy right.
Once Matt Damon gets involved, Kristin, then everybody obviously wants a piece of it. Kristin Smith there from the Blockchain Association. Great getting some time with you. Thanks so much for joining us out of Davos. Coming up, the Bank for Bitcoin. We'll speak with Chiente Hsu, co-founder of crypto fintech company Alex.
And counting on crypto's comeback, how the Winklevoss twins could serve as a test case for the staying power of crypto startups.
I think that's Winklevi. We call them the Winklevi.
That is more fun.
Plural. Let's get access to the latest data and news on crypto. For that, we just type CRYP GO on the terminal. This is Bloomberg. This is Bloomberg Crypto. I'm Matt Miller with Kaylee Lyons. Now, Evercore ISI's Julian Emanuel says the steep drop in cryptocurrencies and the Terra USD collapse earlier this month are not enough to deem the sector a threat to broader markets. Writing, quote, "At this point, we think it is too early to believe that crypto could become some kind of systemic issue like the railroads were in the 1870s. Remember that? For crypto to really become a systemic issue will require a loss of faith in the store of value concept as well as the medium of exchange concept." Wow. That is a lot to think about. Let's get more from Chiente Hsu, co-founder of Alex, a fintech company focused on crypto investing. She joins us now. Such a fascinating idea, your company, and something that's going to be necessary if this experiment really turns into Money 2.0. Why are you so faithful?
Well, thank you for having me here, Kelly and Matt. You know, the value of cryptocurrencies depends crucially upon our perception of this particular currency. Are they going to be part of a very important global payment system? And our perception fluctuates dramatically, right? So given what happened with Terra Luna's explosion, this likelihood is being pushed into the future, that's for sure. But let's zoom out for 12 months. If we observe Netflix down 60%, Robinhood down 70%, Cathy with ARK down 60%, even Facebook Meta is down 40%, and Bitcoin came out down only 20%. So compared with other tech names, I would say Bitcoin came out pretty well.
The biggest concern, though, and we've been talking about regulation ever since we kicked off this show, is that there's more of an unfair structure in crypto, right? There can be rug pulls, there can be Ponzi like schemes, and something like Terra Luna really poses a lot of questions in that extent.
I totally agree with you, Matt. And I would like to say that, you know, stable coins are not equal to other stable coins. What I mean by that is that if you look at Luna Terra, it is arithmetic stable coin. So really, it is pegged one-to-one to a fiat currency, which is dollar, backed by what? not by fiat currency, not by a dollar reserve. I mean, they never had any dollar reserve. It's backed by codes, right? So from design point of view, already in the very, very beginning, there were very heavy criticism about, this particular stable coin. But if you look at other stable coins, for example, USDC, it is backed 1-to-1 by US dollar. And it has been held out really, really well.
That's not very decentral, right?
You are right, Matt. Okay, pick what you want. Which corner do you want? You want a complete decentralization or you want safety?
Fair.
Well, I want to come back to what you said, that ultimately this all comes down to the perceived likelihood of these things becoming part of the global payment system in the future. Is that how you really think about these assets, not as trading vehicles or as stores of value, but actually part of a payment system in which these will be used akin to fiat currencies?
I truly believe in that, Kelly. Why? There are a lot of headlines about Bitcoins, about Ethereum, about all other, altcoins. But ultimately, if you look at the technology or the design of Bitcoin, for example, it is most decentralized blockchain. It never breaks down. It doesn't have a CEO. It doesn't have a headquarters. Nobody can shut it down.
But it can only process so many transactions per minute. You look at Ethereum and what happened a few weeks ago with Yuga Labs. It basically broke the entire blockchain, sent transaction fees soaring because it couldn't process enough quickly enough. That's in part why Ethereum is now moving to proof of stake. But do you have to see everything moved to proof of stake in order for that to actually become a reality?
I think that criticism is very fair, but that's how technology moves forward, is that we will face always new challenges, but millions of people, the human capital in this sector, that all work together to solve the problem, of the new challenges. So number one, there are we call it spring of layer 2, right? All of us, we are PhD computer scientists, economists. We're trying to work out a scalability solution. Rightly so, Kelly. That's really a very, very good point about the, about the speed of Bitcoin, right? So that's what my company is doing. We are building on the layer 1 to come up with scalability solution. But second thing is about, proof of work or proof of stake. I think history yet to tell us which one at the end of the day is going to be the winner. And you remember...
You have a guess?
I believe in multi-chain, and my guess is that it's not going to be one winner take it all, but people will find different solutions because they have different challenges.
Let me just ask you, there's about, 25,000 different cryptocurrencies. Of course, Bitcoin and Ethereum are two of the mainstays. How many do you think are really serious?
At the moment, 20.
Wow.
Yeah.
Yes. That's why, what happened with Terra Luna, I mean, my heart breaks when I read the Twitters, people lose their money. We have started a company, they put their treasury into Anchor, right? They lost completely all their funding. But it's almost like after heat wave, and everything was so hot, so hype, right? After heat wave, you sit down, you say, okay, I really welcome this cool period. Why? We builders can focus on building the technology. There's no more hype. And I would say, next time, if somebody offer you, Kelly, 20% in US dollar without any risk, what would you do? Think about it. And those people who have been pumping, I hope that we all came out better and say, okay, let me think about it first and make our decision.
We all have certainly given it a lot of thought in the last couple of weeks. Chiente Hsu, thank you so much for joining us. She, of course, is co-founder of Alex. Now, coming up, crypto's casualties. We'll dive into the recent collapse of crypto fortunes and the path to recovery. This is Bloomberg Crypto. This is Bloomberg Crypto. I'm Kaylee Lines with Matt Miller. Now to some of the crypto stories that caught our eye this week. An Ethereum co-founder, Vitalik Buterin, says he is no longer a billionaire. He's the latest casualty in the dramatic collapse of crypto fortunes. As recently as September, his digital wallet contained holdings worth about $1.5 billion. But since then, the price of the Ether token has fallen by 55%. And the Winklevoss twins have their fortunes riding on crypto's comeback. Between their family office and the venture arm of their digital asset exchange Gemini, they have stakes in about 50 crypto or blockchain startups. That's according to portfolios they posted online. The latest tumble in digital assets could test the durability of those bets. And joining us now to talk more about that is Bloomberg finance reporter Scott Carpenter. So, Scott, this is a lot of money we're talking about here. A lot of money lost on the part of the Winklevi twins, as Matt likes to call them.
And
that doesn't only affect...
Buterin, right?
Correct.
Also
that doesn't only affect them, it also affects these companies that they may be less willing to invest in, have less money to do so.
Absolutely. They've got stakes in about 50 companies between their family office and their exchange, Gemini. And so they are about as exposed as anybody to the crypto collapse. And it matters for the companies as well, because obviously they're depending on a lot of capital from the Winklevi. Or the Winklevoss brothers, absolutely.
I think it's okay to just refer to them as the Winklevi. It's time-saving and it's fun. They were some of the earliest movers in this market. I can't believe they're not doing better than, well, anyone's doing better than Coinbase, but FTX or CZ. I mean, what's the problem facing these twins? They can't get their Bitcoin ETF passed. They seem to run into unlucky situations in crypto.
Yeah, absolutely. Well, I think the main problem is that they're just extremely heavily exposed. So they did extremely well when prices were up. They were on the Bloomberg Billionaires Index, or list of the top 500 people. And then they've just absolutely crashed down from it because they, you know, as far as we know, they don't have a great deal of cash holdings, or their wealth is highly concentrated in Bitcoin. At one point, they had bought 1% of all the Bitcoin in existence. It's a little bit less than that now. And then they have their family office, which is investing largely in crypto and blockchain companies. They have some other companies, but if you look at their portfolio online, which is unusually transparent.
Many eggs, one basket.
Yeah.
Yeah, exactly.
Well, and of course, they're the faithful, right? So there's a question of whether or not they're ever going to diversify their exposure beyond a world which they so firmly believe in. Thank you so much to Scott Carpenter, our Bloomberg reporter here. And Matt, it raises the question for me. We always talk about Elon Musk as well, and we know he has a bit of a relationship with crypto. Rich on paper, but relatively cash poor, speaking of all things. So that's going to wrap it up here for Bloomberg Crypto this week. Coming up next week, though, Flory Marquez, the co-founder of crypto finance firm BlockFi, as well as Charles Cascarilla, CEO of the blockchain company Paxos, will be joining us. Same time, same place, Tuesdays, 1 p.m. Eastern, right here on Bloomberg.